Hello everyone, welcome back to the Grape Explorer. Today I wanted to take a little bit of a look about investing in wine and whether or not it can actually make you rich. You know, if you were to go onto Google and type in wine investing, you get a whole host of returns from companies you've never heard of, offering you things like double your money in 12 months, 10% yield gains per annum, minimum transaction only $25,000. And so it really got me thinking about, is investing in wine a good idea? What are some of the risks associated with it? And if you were thinking about investing in wine, what's a really sensible way to do it? If you're new to the channel, welcome. I'm the Grape Explorer. On here I do wine education, I do product reviews, and I do lots of wine tasting. So if you're interested in wine, consider subscribing. Now let's start off with the question, why do people invest in the first place? Not just in wine, but in all sorts of tangible assets. Ideally it would be to make a profit on a bottle of wine, which would have increased in value over time. At some point, demand is going to exceed supply. You know, wine of course is finite. Each vintage there's only so much made, and in a particularly good year, once that wine's been made and bottled, that's all there is of that year, and that's why it becomes desirable. And then finally, it's the prestige of owning a particular wine. People collect wine, not just cases of wine, they collect individual bottles because of some perhaps historical value. They have a story connected to them. So there are a number of reasons why people invest. So before I get into the actual investing side of things, I just wanted to give you a little bit more about an understanding around how we've arrived at where we are today with investing. What's some of the history that has gone into the investing in wine? Unsurprisingly, it all starts in Bordeaux. During the 1850s in Bordeaux, a number of shortages of wine caused by powdery mildew led to a demand in previous vintages. And moving into the 1860s, prices doubled following really good vintages of 64 and 65. Those two really good vintages were actually followed by poor vintages, and then a follow-up good vintage in 1868 led to even more people trying to stock up, which of course started to drive the prices up. And it was the 1868 vintage where the prices were not surpassed again until the mid-20th century. So again, we've come into this point where we're talking about demand over supply. Those poor vintages meant people took a look back and started to stock up on some of the good vintages, and this is how they were investing to enjoy wine for the future. They may not have been necessarily thinking about it monetarily, but they were thinking about it from, I need to make sure I've got plenty of good wine. But of course then it started to drive the prices up, and this is where people perhaps started to consider investing more seriously. And in fact we actually have to move to the mid-20th century, still in Bordeaux, where Americans started to buy into the vintages, with 1959 and 1961 proving particularly popular. The Bordeaux first growths at this point started to quadruple in price. As people had more money to spend, that meant they had more money to invest. And the price of these wines had increased to such an extent that all of a sudden a reputation for wine as a blue chip investment was firmly established. Since then, we've seen further investment capital into Bordeaux, particularly in the 1970s, which continued to push prices up. Even when some of those vintages weren't necessarily good, it was more about then having Bordeaux. And it's very much Bordeaux today that continues to lead the world in terms of investing in wine. There is even a stock market for wine called the LivX. Now, the LivX is the London International Vintners Exchange. It's a global marketplace for the wine trade. It published actual prices of wines and contains over £60 million worth of firms buying and selling opportunities in over 15,000 wines. It's not for you or I, unless you're a professional buyer or seller of fine wine, for whom it is for, so it's really for wine merchants, and it is standardised and anonymous. And you can actually track the prices of the LivX, you're able to track prices of wine. So even if you're not a wine merchant necessarily, or you have a collection of wines but perhaps they're not being managed by a wine merchant, you're still able to track those prices. Now, similar to the stock exchange, there are then individual indexes within the LivX dependent upon the types of wines that you might be interested in collecting. For example, the LivX Fine Wine 50 tracks the daily movement price of the most heavily traded commodities in the fine wine market. These would be the first growths of Bordeaux. We're talking about places like Chateau Margaux, Chateau Lafite, Chateau Latour. You've then got broader indexes based on the 100 most sought after fine wines, the 500 most sought after fine wines, and then the 1,000 most sought after. And then you have other indexes as well for the wines of California, things like Screaming Eagle and Opus One, as well as port, incredibly popular, ages very well, fantastic for investments. So port wines from the likes of Fonseca, Graham's, Taylor and Loire. So again, this is for professionals, and this is where a lot of the advertisements you might see on the likes of a Google search will be able to trade on your behalf. They'd be looking for an investment from you, which they will then manage your portfolio, be able to sell, buy at the right time to continue growing your investment. But let's not kid ourselves, wine investment is a risky business. And like I say, when I did my Google search and it came up with all these double your money, triple your money, some of them aren't going to necessarily be legitimate. And there are, of course, tales of wine scams the world over. That's a very easy news story to Google. And of course, there are a lot of counterfeit wines out in the market, thanks to the likes of Rudy Kanuan. If ever you've seen the documentary Sour Grapes, you'll know his story, flooded the market with fake wines. And of course, there is still a little bit of a hangover left from his time, in that there probably are a lot of fakes still out in the market. But let's take a look at some of the key risks associated with wine investment. Well, firstly, like anything, where it's a tradable asset, prices can go up as well as down. So even though you might make an investment of $10,000, it can of course go down. It is an unregulated market, and this is why you see so many unscrupulous merchants, wine investment houses, where they've got no problem selling you the wrong wines, the wrong type of investment. The investment term should be considered as a mid to long term. It's no good you investing £10,000 this week to buy some wine and then selling them again next week. They always recommend that the minimum term should be 5 years, although 8 to 10 is of course going to be better. And it's only going to be specific wines that are going to tend to accrue value. And these wines tend to be expensive from the off. So you really need to ensure that you're buying the right wines at the correct prices. So it is a risky business. There is no getting away from that. But the best thing that you can do is of course research. So on the next slide, I've given a few tips that you might want to consider if you fancy yourself as a wine investor. So like I say, research really is the most important thing you can do. You need to understand who you're going to be working with. Because it's the wine merchants only that can trade in the LivX, you have no option but to work with one of them. So you need to buy your wine from a distributor, a retailer who's reputable and is able to trade in the marketplace. You need to have done your history. You need to have reviewed recent trading trends as well as more long-term data to give yourself the best idea of what you should be investing in. Importantly, and this might be one of the most important things, you need to consider how you store your wines. It's no good putting them in the garage or in a spare room in your house. Improper storage is going to dramatically alter the flavour of that wine. You ideally need to work with a wine merchant who can store it on your behalf in proper wine cellars, and perhaps you might pay a charge for that. And then finally, you need to think about what you want to invest in. A full case of wine is always going to bring in a higher profit. The only exception to this is if you're thinking about a particularly special bottle, perhaps it was a one-off or a limited run, maybe just 100 bottles of a certain wine were made. That's the only time you might want to consider a single bottle. Wine cases tend to be how the trading markets price their wines. So for a bit of fun, I thought I'd let you know about some of the wines that have gone up in value in 2019 coming into 2020. So for those of you thinking of investing, these are good bets right now. Although of course, please remember, prices can go down as well as up. I'm not a wine merchant, I'm just giving you this information, do with it what you will. Fine wine brands, there are going to be a few that you recognise on here. I'm just going to draw your attention to a couple because, the average price of Domaine Romani Conti for a case of 12 wines is £42,000, and that has grown on average over 10% in the last year. You can see there a number of different champagnes. We've got some Bordeaux in there, we've got some Burgundy in there, but it is incredible. And you can see from this just how wild the statistics are in terms of how prices can differ, as well as the average price growth for those wines as well. So I'm sure you're asking the question whether or not I invest in wine. I don't invest in wine. I'm happy with the wines that I've got. I don't see them going up in value. But if I was to invest in wine, what would I do? Now, this is by no means a recommendation, but I'm really thinking about my own personal circumstances here around what's affordable and what would I want to do with the wines. Are they for investment or are they for enjoyment? And I think when you're on a limited budget, the best way to approach it is to think about it from an enjoyment point of view. And that's where something like a cellar plan with a reputable company comes into play. Now, a cellar plan is a simple way to build a collection of investment grade wines which can be tailored to your taste. You pay a fixed amount per month into an account and an account manager plans your purchases on your behalf. Now, the benefit of this, and this is why I talk about it from the perspective of not just someone who would invest but also want to enjoy, is this is a lot lower level risk. You're not making a huge commitment up front, and of course if the wines don't appreciate in value, you can always drink them. It's a nice way to save for the future. Think about something like an anniversary that may be a number of years down the line. It's a really nice idea to have a special wine for that occasion. And also they are tangible assets which have the potential to improve with age. So there are a couple of different ways with which you can approach a cellar plan. You can have a drinking cellar. This is where someone is advising you to build a cellar of wine for drinking only, often selecting the types of wines you would like to include. You then have an investment cellar, which is where they're making suggestions for you to make good investments, helping you build for the future. And then you're going to have a bit of both, a working cellar. Combination of drinking and investment. You might want to split it 40% of wines to enjoy yourself, 60% of wines, and over time you start to reap the rewards. The reason I think that this is a better choice for me as an individual is because I want to perhaps enjoy some of these wines in the future. And if you go to the right company, cellar plans can start from as little as £100 a month. Now, to some that is still, of course, a lot, but it's not £10,000, £25,000 up front. You're being able to drip feed your own money into a cellar plan, building something over a number of years. And who knows, you may get lucky. There may be a fantastic vintage, or some lesser known wines may come to the fore because of the vintage where you were able to invest early. So a cellar plan, for me, is probably something that I would look a lot more seriously into. But as I said at the outset, it is a risky business and the best thing you can do is research. I hope you've found this interesting. This is a little bit different to the sort of video I usually make, but as it's a topic that's of particular interest to me, I wanted to share it with you. Let me know your thoughts though down in the comments section below. Do you think these investments are a good idea, a bad idea? What do you think of cellar plans? And do you have any stories of anyone you know who's fallen foul of wine investments or wine scams? As for now, I'm going to wish you all the best. Say cheers. I'm the Grape Explorer. I look forward to seeing you again soon. Cheers.